Following my last short, on September 17, the Fed cut rates by 25 basic points. This was mostly priced in. That's why the market did not explode. Now the key takeaway is the Federal Reserve is easing in. But the next move and the Fed's tone will decide if it turns into a sustainable rally or just short-lived volatility. On that day, the stocks were mixed. Bonds and yields moved around and the dollar stayed relatively firm. For crypto, Bitcoin got a relatively modest boost, but it was nothing like the much hyped 150k plus. So the first cut opened the door for a potential tailwind, but it did not guarantee a rally. What matters now are three important signals to watch out for: CPI and PCE reports, job market data, future decisions regarding Fed interest cuts. If inflation keeps falling and the Feds continue to cut rate, real yields could fall and liquidity could rise. That's when bigger gains for Bitcoin and other large cap cryptocurrency could see real potential. But if inflation stays sticky and the dollar continues to strengthen, expect a two-sided choppy action that usually hits smaller coins harder. Now, for some real advice. If you are a trader, what you should be doing right now is to reduce excess leverage, tighten your positions, and put clear stop rules. The first cut usually brings a lot of volatility and swings in the market. Do not get wiped out by volatility on a single swing. If you invest, keep a simple core Bitcoin investment and a small, well-researched selection of projects that you trust. Always size altcoins into a smaller position and prefer projects with clear utility, liquidity, and developer activity. Keep a lookout for real-world catalysts that you hold. Any upgrades, partnership, or large inflows, keep a lookout for that. Also remember to track exchange flows and major wallet activity. Those flip sentiments quickly. So the bottom line is, easing is a potential tailwind, not a guarantee or a free pass. Trade carefully and do not chase hype. I will be posting a detailed video later on where I will be discussing what else is happening and for a potential rate cut in October or November and what to do later this year. So hit the like button, subscribe, and keep following for more. Bye bye.